So welcome back, guys. Welcome back to Mac and Gray. So on this lesson, we're pretty much going to learn volatility correlation. So it's going to be a short topic. So I'm going to show you how volatility works, so you can be able to understand volatility in different aspects. Okay. So welcome back, guys. I'm just going to work on showing you volatility today. So and how volatility works to create trades. Okay, so there could be situations whereby you've heard a couple of people saying they trade trading vol, or looking at volatility. Vol and volatility are the same thing. So I'm going to make a couple of statements for you guys to understand a bit better. But all currency pairs and all markets move in the same direction. Okay, I'm going to just show you how that works. All right. So the first thing we're going to look at is, I'm just going to go on my notes here, so you guys can be able to see it on this side as well. All right, so I'm just gonna go on my notes here, and what we're gonna do looking at is volatility. Yeah? Two types of volatility: short-term vol, that involves currency pairs which are in the ABC. If you know when we talked about the commodity pairs, this is where we get the short-term volatility from. Okay. Then we go long-term vol. Long-term vol involves Japanese yen, Swiss franc, gold, actually, yep, gold as well. And also, we can use vol to trade the S&P futures, or S&P 500, and oil, which we haven't really covered too much on oil, but just gonna let it go for now. Okay, so I'm just gonna put that as oil here. Again, this is all gonna be in your notes, so you don't have to worry about remembering any of this stuff. But you do have to worry about using it in your trading. Okay, so everything is positively correlated, right? So we use volatility to look for discounted prices or premium prices. Okay, so how do we do that? So let's just go on to the chart quickly. So I've pretty much taken off. I don't want to see the chart of the Aussie dollar. Okay, I'm just gonna add a lot of futures. So I'm gonna add futures, so we can see how the futures market relates to other markets. Okay, then I'm gonna add British pound, so we can just pretty much do all the commodity currencies first. Yeah, 6C1 hash, then 6E1, 6J1 exclamation mark, 6S1 exclamation mark. I'm also going to add the S&P 500, S&P futures. Okay, all right, so here we are. Okay, the first thing I'm going to do is just put them all to scale. Okay, so you can pretty much see that when it comes to price, it looks really messy. Okay, but we are kind of moving in the same direction. There isn't a lot of discrepancies. If you do look at, let's have a look. Okay, besides the S&P 500, all the futures market are correlated, right? So if I'm looking at, I'm just gonna switch some of these off. All right, so what am I doing here? Okay, so if I'm using this to look at volatility, I am going to, if we're selling, and if I'm looking at the market that's selling, so let's just look at, let's use the vertical line again. Let's just pick any point in time. Okay, the blue line, which represents the British, we click on it, you see that? It represents the British, so it represents the pound futures. Okay, they are moving faster than this line here, which represents the Canadian futures. If I wanted to buy a currency, or if I wanted to sell a currency, if I wanted to sell, I would then sell the slow currency, which is the Canadian futures at the moment. So instead of currency, let's stick to futures. If I was to sell futures, I would look at the correlation, know that it's positive, look at where the pound is, the pound futures compared to the Canadian futures, and then I would sell the slower futures. Okay, and the slower futures in this case is not the pound, but it's the Canadian. Okay, the rest have caught up. So the pound futures are quite down, the Australian futures are quite down, but the Canadian futures are a bit higher. So let's have a look at the Euro futures. Look at that, beautiful. The Euro futures are even faster. Okay, let's look at the Japanese futures. Japanese futures are moving also faster. All right, let's look at the Swiss futures. Whoa, now look at the Swiss futures here. Okay, Swiss futures did move faster than every of the other futures, right? So if you are here and you see the Swiss futures are here, right? Which pair would you trade? Again, it would be these two gold lines, either the Australian futures or the Canadian futures, because they represent the gold, right? So you can use this on a 5-minute chart, whereby you want to see what pair. Look at this. Which is the fastest pair here? It looks like the British futures are about to move off, but the Australian futures, sorry, are still down here. So I'd be buying the Australian futures to catch up to the British futures. Okay, so let's just do this comparison of volatility with currency pairs. I think that would help understand a little bit better of what I'm talking about. So the first thing I would do is, I'm just going to cancel all of this. So the first thing we're going to look at is Euro US dollar. Remember, you have to use a comparison. So Euro US dollar. Then I'm going to put in the pound US dollar and the Aussie US dollar. Then New Zealand US dollar, Aussie CAD, New Zealand CAD, Euro JPY, pound JPY, pound New Zealand, and pound AUD. Okay, right, so look at that beautiful volatility correlation, right? Quite beautiful, quite messy as well, but quite beautiful in a sense. So if we just put them all into scale, so we gotta fix the scale to no scale. So we're pretty much trying to understand what pair can we use and how correlated is it, and is it faster or slower than the correlated pair. So now that's all done. First thing I want to do is compare pound and euro dollar. So now what you're looking at is a little bit of divergence in volatility, right? Or divergence on the currency pairs, right? And see whether there's a way you can take advantage of that. So look at this. And this is actually a beautiful kind of understanding. It hasn't lost. When you see something like this, where the pound has not even broken the lower lows, right? And continues to trend higher, but the euro has, knowing this currency pair is positively correlated, the first thing you would do is definitely be buying the euro, okay? Because you can see the discrepancy and it's eventually going to catch up, right? So you're looking for instances and moments in time whereby you can take advantage of the correlation. There's not a lot happening, but you can tell that, look at this, the euro much quicker to fall, right? Much quicker to fall. The pound is still stalling. Okay, so this would be an opportunity to look at the euro as a faster moving currency pair, and then trade that by taking a short on the pound. Okay, by shorting the pound, because eventually the price will catch up. Right? But again, this kind of helps when you've completely covered all your analysis. So the most important type of analysis, we've done the value. Now we're going to cover the volatility, and lastly we'll cover the volume. Once you have the 3 V's ready, you can now look to take very decent trades. Okay, so let's have a look at the Aussie. Looks like all currency pairs are correlated, because look at that. You can see how the euro has taken a dive, but the Aussie is still like lacking. An opportunity for you to go short on the Aussie. Let's add the New Zealand dollar and have a look. Look at that. So you can also short the New Zealand dollar in this instance, right? Aussie CAD. Look at that. Euros crashed, Aussie CAD is still maintaining. So if I was to do this, you see that? I'm just gonna focus on these two currency pairs versus that. You can kind of tell the difference, right? You can see that something's going to happen. Look at that, right? So the volatility between these currency pairs, you will be able to say that, look, the euro is at the moment more volatile and faster moving than the Canadian dollar, right? In this pair, than the Aussie CAD. meaning that you're taking an opportunity to go short on Aussie CAD, because the prices will eventually follow, because all currency pairs are correlated, right? I know people say negatively correlated, positively correlated, positive and negative correlations, but eventually they all move in the same direction. Okay, so I'm just gonna take a little bit of that off. So I would advise the best approach to have on this, because it could be a bit of too much information. So the best thing to do is compare Euro US dollar and Pound US dollar together. Compare New Zealand and Aussie together. Look for some discrepancies in there. Okay. Aussie CAD and New Zealand CAD. Look for some discrepancies in there. See if there's anything that you can see, right? In terms of movement, you will always see some discrepancies. Although this one definitely looks really perfect, right? This one moves a bit faster, but eventually catches up. Look at that. Okay, so this is a beautiful one. Starts falling, doesn't really break the highs yet. This one kind of like gets to equal highs. This one doesn't really get there. So microscopic and minute detail like this would take you to be quite observant in the market. So in terms of trading, you need to be curious. You need to allow yourself to be surrounded by curiosity, right? Learn this, back test it. Don't just look for trades. Look to understand the full market. Okay. Oh, beautiful correlation here. Look at that. I'm looking at, yep, the pound yen moving higher and never making or breaking these lows, while the euro is breaking the lows, right? Pound never breaks the lows, maintains structure, and keeps going and breaks structure to the upside. The euro breaks structure to the downside. Good divergence there. Eventually price will catch up. So since the pound is the quicker mover, the faster moving currency pair, gives you a little bit of an idea of, have you ever thought there's some moment in time when you've ever looked and thought, whoa, the euro is moving, or the pound is moving, the pound yen is moving, the euro yen is moving, but which of the yen pairs can I take part in so that I can be able to capitalize on the returns, right? So I can be able to capitalize on what I'm seeing. Now, what you would have to do would be then to take all the euro pairs, line them up like this, and compare them and see which one has the gains and which one is actually moving slower, and you're gonna buy or sell the slower moving pair. Okay, so you're looking for discounted prices, and this is a beautiful discount. All right, beautiful discount. Pound, again, pound versus commodity pairs, again, very correlated pairs, but if there's an opportunity here to spot and see a little bit of a difference, very tough on this one. Very, very tough. Very tough. I mean, you can only go backwards, but this is a 5-15 minute chart, so maybe you might have to look into other charts. But guys, spend your time looking at these things, this volatility correlations. Spend your time trying to understand them, not only just looking at the charts, because the charts are amazing, but you need more analysis to be done to be able to take good trades, you know? So sometimes you need to get off the chart, look at something else, be curious about what's volatility saying, what's value saying to us, what's volatility saying to us, okay? And then from there, you can then make, kind of better trading decisions, right? So that is the end of this topic here. I've used for this topic of what we've pretty much done is looked at the short-term volatility. We've looked at the long-term volatility, and when I said we haven't really looked at long-term volatility, so what we've done here is we've understood that volatility has short-term and long-term. Okay, we've understood that by looking at volatility, we're looking for discount prices. Okay, and we've understood that everything is correlated. So everything is correlated. So from those understandings, we need to know that, okay, fine. The next thing that we've done is we've managed to pair pairs that are close to each other, so that we can be able to identify which currency pair can we take advantage of when the other currency pairs are moving too fast because of their volatility. Which one is lagging? Which one can we take advantage of and get discount prices for? Okay. Thank you very much, and I'll see you guys in the next lesson.